Landlords, this could be your last warning. There is going to be a bloodbath, potentially, in this upcoming budget. We've been told by Keir Starmer that they will not increase tax on working class people. However, they've also now deemed landlords to not be working people. So they are talking about changing the regime for residential investors in favor of a wealth tax. This isn't about taxing the rich. This is really going to hit the middle class, to be forcing those retirees out of their homes, and that, quite frankly, is disgraceful. Lloyds Bank, BlackRock, they're out there buying loads of houses. Will they be affected? No, because big corporations own all the properties, big corporations own all the businesses, and the small individuals are driven out. Property's still incredible. That's why the big companies want it. It's going to keep going up and up over time. You just need to make sure you're doing it in the correct way. And landlords, this could be your last warning. There is going to be a bloodbath, potentially, in this upcoming budget. So let's run through some of the things that have been discussed, some of the things that we might anticipate happening in this upcoming budget, who they're going to affect and how they're going to affect them. So specifically, what we have right now is a £40 billion deficit, which is the biggest shortfall that the UK has had in many, many years. And so we're going to have to work to make some of that up. God forbid we should just learn to spend more efficiently and more effectively. No. Let's go and tax the rich. But let's take a look at what taxing the rich actually look like and how that impacts our nation on the whole. So we've been told by Keir Starmer that they will not increase tax on working class people. However, they've also now deemed landlords to not be working people. So landlords, just know that you are directly in the crosshairs. Although conveniently that tends to be landlords who own property in their personal name and not landlords who own in a limited company. We'll get over to that. But what's happened over the last year? Well, we've seen more millionaires leave the country than ever before. Now, why would they do that? Well, a large part is due to this high tax rhetoric. Frankly, people have had enough. And if you think to yourself, well, good riddance, and I'll see you later. If you don't like it here, go somewhere else. Not the smartest of thinking, because the top 10% of earners in the UK contribute 60% of all of the tax. If you want to get rid of the people that are paying the most into the tax system, doesn't seem the most intelligent idea. And so why are they going and where are they going? Of course, they're largely going to countries that have better weather, lower crime rates, are safer to live in, and have better taxation. And so we're losing more millionaires than ever before, which just further deepens the challenge. Now, what can we anticipate upcoming in this budget? Let's go through a few of the things. One of the things that is being discussed is, this is landlords, by the way, when surveyed, their biggest fear is that capital gains tax will be increased. And this one's been floated around for a little while, so there's every chance that this could be the time, because this is the sort of thing that they're not going to release early, because they don't want you to exchange contracts and avoid that burden early. Fun fact, capital gains tax is due from exchange of contracts, not from completion. And so if you were to exchange contracts pre-budget, then you would likely be treated with the capital gains tax that is effective today. Now, at the moment, we've got 18% to 24% for capital gains tax. 18% is the lower end and 24% for higher rate. Now, this could be brought in line with income tax, which would be more like 20% and 40%, which would be a phenomenal 16% difference for higher rate tax payments. That's going to be a big difference. Somebody who's seen a property go up by 200,000 over the years, which isn't that difficult in the property world, that could be a £32,000 additional on top of their other tax. Now, what else are we hearing about? What else is potentially going on? Well, lots of talk over stamp duty changing, and hard to really say what that might look like, but specifically they're talking about it in terms of residential homeowners, because there's a lot of confusion here. People say, oh, there's not going to be any stamp duty, we're just going to go and buy loads of property. Well, I don't think they're saying they're going to get stamp duty gone for investors. That would be nice, I don't think that's going to happen, but they are talking about changing the regime for residential investors in favor of a wealth tax, which isn't good news, by the way. So this wealth tax that's being floated around at the moment, that could be properties over £500,000 subject to a 0.5% tax on an annual basis over that amount, and that of course will have a threshold system most likely. Now the key thing here is that this isn't about taxing the rich. This is really going to hit the middle class. You know, the people that have bought a house, they've had that house for the last 40 years and it's gone up in value. Let's just get some money out of them. Well, that's fine unless they're retired and they're not able to pay that money on an annual basis. And now we're going to be forcing those retirees out of their homes. And that, quite frankly, is disgraceful. So what's really going on here? Well, we're just money grabbing. We're just money grabbing people that are sitting ducks. According to the English Private Landlord Survey, 94% of landlords currently own property in their personal name. We got the big hit back when Section 24 came out, didn't we? Section 24 meant that landlords who owned in their personal name couldn't offset their interest as an expense. In what world do we tax turnover and not profit? Outrageous. But we've just sort of accepted it as part of our day-to-day life, and now 70% of people are buying from limited companies, but the majority of landlords are still stuck in personal name. Well, guess what, landlords that are stuck in personal name? The next thing that is coming, and this one is fairly likely because there's not much smoke without a fire, is the national insurance. Now, national insurance is generally something paid by employees, and they're now saying, well, landlords, why should they not have to pay national insurance? Let's charge them national insurance as well. So that's one thing that's been purposefully leaked, by the way. Now remember, the government are very smart. They've not been playing this game for 5 minutes, so they will intentionally leak some things. One, to test your response, and two, potentially to distract you from other things. So don't get too distracted. You know what like magicians do when they say, watch this hand and something's happening over here. But I do believe with that one, there's probably not smoke without a fire. So you've got the national insurance. Now, regards to stamp duty, there's also been some discussion about things like mixed-use properties. At the moment, you can buy mixed-use properties and pay non-residential rates. That means you pay commercial rates for both the shop and the uppers. That could change. They're talking about charging the residential aspect at residential rates. That means, long story short, a lot more stamp duty on mixed use potentially if that comes out, if that actually happens. So who's the target? Well, it's not companies. Why? Because the companies are out there proactively buying. Lloyds Bank, BlackRock, they're out there buying loads of houses. Will they be affected? No, because they're not going to pay national insurance because they're a limited company. They're not going to pay capital gains tax because they're a limited company. They're not going to pay income tax because they are a limited company. So this really is out there to penalize the small folks. You want to talk about penalizing a little guy? By the way, remember, the whole plan is to protect working people. Now, you want to talk about penalizing a little guy, but also discussing potentially decreasing VAT threshold from £90,000 to £30,000. What will that mean? Well, VAT is based on turnover. So if you are turning over £30,000 in a small business, and that is a small business, doesn't mean you're making profit of 30,000. You could be making £7,000 profit, but you're going to have to start charging VAT, 20% on top of your services, driving instructors, tutors, photographers, painter and decorators. People are going to be caught within this net. What does that mean? For the actual operator, it means they're not going to be competitive anymore. They're either going to have to put their prices up by 20% and lose clients, or they are going to have to absorb the extra cost and lose profit. So that working person is now going to struggle to run their small business. And what does that mean for the big companies? It means they're going to retain a monopoly or build a monopoly even more so, because they're going to be able to sweep up all the business that the small business wasn't able to compete on. They're going to be able to say, no problem, don't go to Mr. and Mrs. Jones, we're charging effectively the same price, come to us. Which means we could see the biggest economic shift in a very long time, where business moves from small individuals, even more than it already has, onto the big corporations. So what's the plan? Let's see. Big corporations own all the properties, big corporations own all the businesses, and the small individuals are driven out. Remember that little statement years ago? You will have nothing and be happy. Well, that's the direction we're potentially headed in. Hate to be the bearer of bad news, but it's not all bad news, because there are still sensible, educated, supported investors out there making the right moves. Property's still incredible. That's why the big companies want it. It's going to keep going up and up over time. You just need to make sure you're doing it in the correct way. And the correct way is the way that they are doing it. Buy in through limited companies. Make sure that you retain your tax efficiency. Make sure you stay ahead of the curve. Make sure you're operating high cash flowing strategies like commercial property, HMO, short-term lets, so you can be ahead of the curve. If you want to learn more about what we're doing in property right now to get ahead, that's still going to be thriving in 2026 and beyond, then why not come along to one of my free webinars? You can find the link in the description to this video, where I talk about high cash flow strategies that actually work in 2025 and 2026 and beyond, not the things that we did many, many years ago. So tap the link in the description. I'd love to see you there. And of course, let's see what happens in this upcoming budget.